Welcome. This is a presentation on the tax implications of online sports betting presented by the North Carolina Low-Income Taxpayer Clinic at Charlotte Center for Legal Advocacy. This presentation is a quick, general overview of your responsibilities as a taxpayer if you participate in online sports betting or other gambling activities. It will also cover other important considerations, such as the requirement to keep accurate records of gambling activities and how gambling income may affect your eligibility for public benefits. This presentation is for informational purposes only and is not meant to provide legal or tax advice. It is simply meant to be a helpful resource on the basics of taxes and online sports betting. So, why is this important? In June of 2023, Governor Roy Cooper signed HB 347 into law, legalizing online sports betting in North Carolina for the very first time. 8 online sports books were launched in March of 2024, and the North Carolina State Lottery Commission reports more than $659 million was wagered in the first month, and that number continues to grow. With more opportunities to gamble coming available, it's important to be aware of your obligations as a taxpayer. Here are some of the frequently asked questions about gambling that our presentation will cover. Are you a professional gambler or just a casual gambler? And why does that matter? Do you have to report your gambling winnings on your federal income tax return? What about your state or North Carolina income tax return? Can you deduct or claim losses related to gambling? What about gambling related expenses? What if you are not a U.S. citizen? Do you have to report your winnings on your tax return? What if you don't receive a tax form, like a Form W-2G, from the casino or sportsbook that you use to gamble? Do you still have to report your winnings? Will online sports betting affect your public or government benefits? These are all important and commonly asked questions to consider when placing online sports bets or participating in other gambling activities. So, what is a casual versus a professional gambler? A professional gambler is someone who is in the trade or business of gambling. Conversely, a casual gambler is someone who is not. More specifically, if you are engaged in the trade or business of gambling, if you gamble full time, in good faith, with regularity, to the production of income for a livelihood, and not as a mere hobby. An example of a professional gambler is a professional poker player that you may see on live poker tournaments. Most people are casual gamblers. Why is this distinction so important? Casual and professional gamblers use different forms of their tax return to report their winnings. Professionals report their winnings on a Schedule C, profit or loss from business. Casual gamblers report their income on a Schedule 1, additional income and adjustments to income, which we'll discuss in more detail later. Now that we know we're probably not professional gamblers, let's discuss when you should report your winnings on your federal income tax return. The general rule is all income from whatever source is includable in gross income, which means all income should be included on your tax return. And income includes gambling winnings. So, yes, if you have a tax filing requirement, gambling winnings should be included as income on your tax return. Gambling income includes cash winnings, as well as the fair market value of prizes such as vacations and vehicles. We've been talking about online sports betting, but some other common examples of gambling where this general rule also applies are the lottery, raffles, casinos, slot machines, and horse races. You should report your gambling income on Schedule 1 of your tax return. Here is what a Schedule 1 looks like. The highlighted line 8B, titled Gambling, is where you would include your gambling income. So how do you know how much gambling income to report? Sometimes casinos or sportsbooks will send you a Form W-2G, certain gambling winnings. They are required to send you a W-2G if you win at least $1,200 from a slot machine or bingo, $1,500 from Keno, $5,000 from poker tournaments, $600 from any other game where the payout is more than 300 times the wager, or any amount subject to federal income tax withholding. Additionally, many sportsbooks keep track of wins and losses and compile them into a win-loss statement that you can normally find on your online profile. This is not a formal tax document, but can be helpful in tracking your gambling activity. If the sportsbook or casino does not provide these documents to you, you are still responsible for reporting your gambling income. This is why accurate record keeping is so important. The IRS requires taxpayers to keep an accurate record of all gambling activities. Myth alert: the first $600 or $1,200 of gambling income is not taxable. This is not true, and the myth stems from Form W-2G reporting requirements that we just discussed. Remember, you must report all gambling winnings, even when they are not reported on a Form W-2G. Gambling losses are losses from wagering transactions, meaning losses that occur from an actual bet that you placed, not expenses like app fees or travel costs. Losses can be deducted on your federal tax return to lower your taxable income, but only if you itemize those deductions. Typically, when you file your tax return, you have the option to take the standard deduction or itemized deductions, which allows you to subtract certain allowed expenses instead of taking the standard deduction. You can report your gambling losses on Schedule A, Itemized Deductions, in the Other Itemized Deductions field, highlighted on the PowerPoint here. There are some requirements in order to deduct your losses. You must have kept an accurate record of your losses, and you can't deduct more in losses than you earned in winnings. Meaning, if you won $100 on a sports bet, but lost a total of $1,000, you can only deduct $100 in losses. Some of the general rules differ if you are considered a resident or non-resident alien for tax purposes. But generally, if you are required to file a tax return, you must report your gambling winnings on Schedule 1 of your tax return. If you are considered a resident alien, meaning you are a lawful permanent resident or meet the substantial presence test, you will generally follow the same gambling income and loss rules discussed earlier. If you are considered a non-resident alien, meaning you aren't a lawful permanent resident and you do not meet the substantial presence test, then your winnings are taxable if 1. The winnings are not connected to a U.S. based business, also called non-business winnings, and 2. The winnings are not exempted by treaty. There is an exception for non-business winnings earned while playing blackjack, baccarat, craps, roulette, or big six wheel. The IRS has a helpful guide that we've linked to the end of this presentation to help taxpayers who are considered non-resident aliens determine if their winnings are taxable. Also, taxpayers who are considered non-resident aliens for tax purposes may not deduct gambling losses. There is an exception for residents of Canada. Now, let's discuss when you should report your winnings on your North Carolina state income tax return. The North Carolina Department of Revenue uses your federal adjusted gross income to determine your North Carolina income. Remember, the general rule is all income from whatever source is includable in your gross income, and income includes gambling winnings. This is also true for the state of North Carolina. Additionally, North Carolina income includes any income from sources outside of North Carolina, which means you should include winnings from other states on your North Carolina tax return. Conversely, you should check the filing requirements of other states, as you may be required to file a tax return there. Unlike federal law, North Carolina law does not allow casual gamblers to deduct losses on their tax return. Lastly, let's discuss some other important things to consider when gambling. First, the importance of keeping an accurate record of your wins and losses. The IRS requires taxpayers to keep an accurate record of gambling activities, and they've even laid out some specific requirements of what that record should include. It must be supplemented by verifiable documentation, which may include a Form W-2G, a Form 5754, which is a statement by a person who receives gambling winnings, wagering tickets, canceled checks, bank withdrawals, and statements of actual winnings or payment slips that were provided to the taxpayer by the gambling establishment. The record must contain at least the date, the type of wager, the name and location of the establishment. If you're betting online, document which sportsbook you use, names of other persons present, and amounts won or lost. Keeping an accurate record of gambling activities is important in case the IRS requests proof of your wins and losses. Another important consideration is understanding how gambling income may affect your eligibility for public benefits. Eligibility for many government and social services programs depends on the applicant's household income. Some examples include food and nutrition services, Medicaid, and supplemental security income, subsidies for marketplace health insurance plans, and more. Some programs use your adjusted gross income, or AGI, from your most recent tax return to determine your household income. A common question is whether deducting losses will lower your AGI so that gambling income won't affect eligibility for certain programs. The answer is no. While itemized deductions ultimately reduce your taxable income, they do not reduce your AGI, which is why it's important to do your research and know the income restrictions of any program from which you receive or plan to receive benefits. So, some key items to remember. Most taxpayers who gamble are not professional gamblers. Gambling winnings are includable in gross income, and taxpayers must report all of their gambling winnings, even when you don't receive a tax document. Taxpayers can deduct their gambling losses on their federal tax return if they itemize, but cannot deduct gambling losses on their North Carolina tax return. There are special rules for claiming gambling income and losses if you are considered a resident or non-resident alien for tax purposes. It's important to keep detailed records. Do your research before you play, especially if you receive benefits from programs that have income restrictions or requirements. Here are some helpful resources where you can find more information about tax rules regarding gambling income and losses. We hope this presentation was informative. If you'd like to connect with the Charlotte Center for Legal Advocacy or our Low-Income Taxpayer Clinic, here is our contact information. Thank you for watching.